the sea, your name is to the honor.
All right. I hope you can hear me. Good morning, ladies and gentlemen. Welcome to today's morning market review. Today being the 8th of June, 2023. It promises to be an exciting time, promises to be very profitable, promises to be very expository and very eye-opening. Believe you me, it's not gainsaying that the market has been quite interesting over the past couple of weeks, and we are seeing some changes in direction at this point in time. So we'll actually be looking at what has actually made those changes happen and how we can actually forge ahead in actually making a whole lot of money from this market. And just sit back and relax, grab a cup of coffee, a cup of water, anything that you feel can actually make your money. I know it's a cold morning in Lagos this morning. I don't know where you are. It could be Abuja, it could be Port Harcourt, it could be Ibadan, it could be Ado Ekiti, anywhere you are around the world. Just grab whatever suits you and what's good for this weather at this point in time to actually calm you down and listen attentively as regards what we'll be discussing today and how we will actually make money from the market at this point in time. So welcome on board and sit back and relax. Let's allow more people to join the class before we begin in earnest, right? So let's actually give more people room to join before we would actually start this class in earnest. Welcome on board. Welcome and get a pen too. It's very important. A pen and a paper or a pen and a book, anyone that suits you. And let's get started in another couple of minutes. Welcome back. And I think we have more people that have joined so far. So let's give them extra 1 more minute to probably get everybody together. Then we'll actually begin this class very, very fast. Very fast. So let's give more people more room to join. Welcome once again. All right, I think we have more people that joined already. So good morning once again. I think I said today being Thursday, the 8th of June 2023, promises to be exciting and very, very explanatory and profitable as it were. So diving real quick into what we have and how we can actually make some good money for ourselves before the end of today, right? Let's actually have an overview of what the market looked like yesterday and how we would have actually made some money. But notwithstanding, irrespective of that, there will always be opportunities in the market at each point in time that we can always make money from as time goes on. And I'm sure you also understand that perfectly well, right? So I think yesterday we saw a couple of news, and I think majorly the news we saw yesterday. Let me share my screen as regards my Forex Factory so we could see that real quick. Majorly the news we saw yesterday was real quick. Yeah. Yeah, the news we saw yesterday, being 7th of June, was majorly from the Australian dollar. That's the Reserve Bank of Australia's governor, Lowy, spoke yesterday, and I think majorly the GDP also came out around 2:30 a.m. in the morning, and I'm sure a whole lot of us are fast asleep at that point in time. But notwithstanding, some people made money from that. But majorly, the ones that we could possibly would have focused on, maybe right from when the market review was being run yesterday, was probably Swiss franc at around 8 a.m. yesterday morning, and also the Canadian dollar news that came out by 3 p.m. And I'm sure some of us have an idea of what this news practically did to Canadian dollar yesterday, because it actually jacked up. They increased their interest rates or their overnight rate as it is written here, but it's practically the same thing. So it was increased, and we actually saw the Canadian dollar gaining some level of strength as against some major peers in the market. Though there were a couple of low impact news that I would have shown us, but I feel like, to be honest, since they are low impact, they really do not push the market as such. So I see no reason why we should actually put them into consideration while we are trading, right? All right. So understandably well, let's move on real quick. Since we have that at the back of our minds, and from what we can actually read here, that's on investing.com, it said the dollar edged high against the yen on Wednesday as investors awaited US inflation data for May. So everybody's actually on the seat. Hopefully, tomorrow will be the deciding factor as regards what the interest rate in the US will be looking like. Let me be sure if tomorrow is quite visible as regards that. Yes, tomorrow is the night. Okay. 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 I think interest rate data should be coming out from the US next week. So major investors are actually looking forward to that particular news as we get that. And the Federal Reserve interest rate decision next week, yes, would actually give us an idea of what the dollar would likely be ending up as. Because I think sometime last month it was being discussed that there might be a pause on interest rate, but the recent data that has been coming out from the US has not been the only sector in the US that seemed like is giving it some sort of redemption is actually the job side. That's the employment side that actually been coming out very good. But over time, I think on Monday, there was a particular data that was released that came out really, really bad for the USD and is giving them a second thought as regards probably still putting it on a pause or increasing it by another 25 basis points. So it's still left to be seen. So fingers crossed up until next week before we can actually decide or before we can see or say that, okay, this is what we want to do as regards the USD. But what we'll do today, we'll definitely know either technically or based on the fundamentals from all other major currencies, right? So we actually saw the Canadian dollar jump after the Bank of Canada hiked interest rate yesterday. Yes, that's no gainsaying. And inflation data on Tuesday is expected to show that prices rose by 0.30% in May. That's for the US. But I think there was some discrepancy as regards that data that actually caused a whole lot of mixed reaction or sentiment. So back to what we are discussing. Really sorry for that little short break. So back to what we're discussing. So majorly, what's happening in the US seems like they might, but I think the only thing US would likely do is that, at this point in time, this is the time in Western countries majorly where a whole lot of people go on vacations, right? So there will be a whole lot of money in circulation and is expected to happen because it's a time where a whole lot of people are spending because they've actually been working for a while, understandably well. But how would they be able to control a whole lot of money in circulation? The only way you can control it is by making sure interest rates so that people wouldn't borrow. You discourage borrowing and try as much as possible to make sure the ones that are paying back um, in terms of the loans they've borrowed over time, the interests are hiked or increased. So that would actually discourage some, not 100%, but to a great level, some sort of money in circulation at that point in time. So what I feel, to be honest, is looking at the chunk of data that has been coming out from the US, and it seems like it's going to be favoring the US, like they've been painting, because global economic growth generally has actually slowed down a great deal, right? So it is expected that the US tries to take caution. So they might not 100% be going by what they feel like they would do from last month. So this month, we might actually just be seeing 25% increase again. But it will be contrary to what was discussed last month. So to a great extent, that might actually cause a whole lot of volatility in the market. But keep your fingers crossed, keep your cards close to your chest, and let's see how that particular space actually pans out. But aside that, I think the Eurozone has actually been doing a great deal for itself in recent time. And I'm not sure as regards what it did yesterday. Let's quickly look at what Euro USD did generally. I think some sort of there was a sort of boost from the eurozone yesterday, which actually was what we saw as regards this couple of candles that were bullish, and then we saw some sort of retracement as well, and I think that majorly could actually be attributed to some technical movement, because price got to this untested resistance, then we saw some retracement of that particular zone, which is expected to happen in the market. Price is expected to test significant levels, and that significant level initially was somewhere around here. If you can actually see that, and you can see it is quite close. Price tried retesting it again yesterday. The reason why I actually picked this level was because initially the last time price tested it was sometime around 30th of May, which is what we can see from my cursor here, right? Now, price tried testing it again. And the same thing, as soon as price tries testing that particular level, there's always a sell-off, right? Then sometime it happened yesterday again, there was a sell-off. So if I were you yesterday, I would have actually made money both from the buy and the sell as well. But don't worry. But don't worry. Okay, I think we're back now. All right. So like I was saying, price is expected to actually test a particular significant level, then respect it, because majorly the idea behind technical analysis is that price should respect or price should react, because it's more or less like a reaction of price to what has happened before for it to actually repeat itself again, right? If that's the case now, that was exactly what we saw on Euro USD for yesterday. So for what we possibly do on this instrument today, first off, let's look at what the dollar is doing at this point in time. This dollar is quite flat this morning. From my 1 hour chart, the dollar is very flat with the reaction of what we saw. But we actually saw something. There was a gap down in the opening of price this morning. The same thing happened yesterday. There was a gap down. Then we saw price push up before he actually ended up the way he ended up yesterday. So I think the same thing might likely be happening today, because this seems like the price reaction seems almost the same. But the only difference is when there was a gap down yesterday, there was almost an immediate cover up for that gap with a couple of bullish candles that formed afterwards. But for today's on, when the gap happened, that's the gap down, the price has actually been flat. From what we can see here, there's been some struggle between the bulls and the bears at this point in time, which is safe to say that we can't really deduce the direction of what this instrument is doing. But one thing that is worthy of note is the fact that most of the time when there are gaps like this, price tries as much as possible, maybe not immediately, but at some point in time during the price movement for that day or before the next day, price tries to cover the gap using some sort of new candles to formulate the closure of that gap. So what I would say we should do, and coupled with the fact that the reaction of price, from what we can see in the last three candles, there's been some sort of rejection from this support. I would consider this as a support, and reasons being that if you look at it over time, or let me just adjust here to, if you look at it over time, there's been some sort of price rejection around this zone, somewhere here, here as well. Then we saw a little bit of it, but price broke below it yesterday. And I think the same thing is likely going to happen for today. And with what I'm seeing here, this seems like a bullish arami that is forming as a candlestick at this point in time. So it is expected that price will likely push up to cover the gap first, then also retest this verified resistance, because price has actually been respecting it since the beginning of this week. And if you look back, I think this is Monday, this is Tuesday, Wednesday, Thursday, then yesterday, sorry, today being Thursday. So be that as it may, today's projection for USD would likely be that it could be possibly strong. And also it should be noteworthy that unemployment claims is actually built to drop sometime later today. Let me quickly check that for us, so we'd have an idea of when unemployment claims would drop. Unemployment claims is expected to drop at exactly 1:30 p.m. today from the US. Then we also have from the Swiss franc, we have the Swiss National Bank chairman, Jordan. He will be speaking by 1:05 p.m. So if you're doing anything, we also analyze Swiss franc, and let's see what we would actually do as regards that market. But first off, back to our chart. Now, I said USD IDX, that's the US dollar index, would likely be pushing up a little bit today because of the rejections that we've seen from this set of candles at this point in time. So if I were you, I'll just take my buy right from where price is currently forming at this point in time, anywhere here, anywhere within this zone, within this gap. Yes. This should be your buy zone all through. So I think if I were you, I'll probably start buying USD, US dollar index at this point in time. So at least, but if you want to wait until you're sure the price has broken above the gap, then you can start entering your buy right from 104.063, 104.063. Then you can ride it upwards up onto this verified resistance at around price level 104.315, right? So all these zones, this zone should be your buy zone all through, which is what price has actually been doing over time. So just start buying right from, if price can cover the gap, yes, start buying right from 104.063 down or up until 104.315, right? So let's take that very, very importantly. Now, moving on real quick, back to Euro USD. Back to Euro USD. You can actually see from the reaction of the current candle that the Eurozone, or this morning, is actually opening lower. And I think we can see from what I read out at the very beginning of this. Okay, let me just be sure I read it out for us. There was something I saw. All right. European stocks market are expected to open marginally lower Thursday, with investors searching for direction ahead of release of the Eurozone growth data, as well as next week's key central bank meetings, right? European stocks appear to be something of a holding pattern ahead of the next week's policy setting meetings from both the ECB, that's the European Central Bank, and the US Fed Reserve, right? So what is note of what it to actually do if this is expected to happen? Caution ahead of the central bank's meeting. The ECB is widely expected to raise interest rate by a further 25% basis point. That's on Thursday next week, with President Christine Lagarde saying that she, this week, with the inflation pressures remain powerful, and also borrowing costs will be raised further to tackle these pressures. Are we together? However, the FX next move is uncertain, like I said, right? That's from the USD now, is uncertain. That is, future traders still put a 70% probability that on the US Central Bank pausing rates hike next week. But last week's job report indicates that the labor market remains very tight. And also, there is as expected news that will be showing, that's the CPI for next week, Tuesday, that could be very, very crucial as well. And also, the Bank of Canada followed the Reserve Bank of Australia, that's yesterday, followed their lead by a surprise 25 basis point hike, and adding to the uncertainty over whether the Fed will stand the same ground next week. Right? So now moving on, the Eurozone GDP data that is due to actually be released. So back in Europe, investors are likely to focus on the Eurozone unemployment figures for the first quarter and revised GDP data for the same period. So the initial GDP release showed that the region showed no growth in the first 3 months of the year, gaining 1.2% on the year, which represents a sharp slowdown from 1.8% growth the previous quarter. So what this means is that the GDP data that was released, or that is bound to be released, has actually not been showing that there's been significant growth since the beginning of this year. So it's expected Eurozone's hike in interest rate is no brainer. It is bound to happen. So if that is what will be taken into cognizance for today, because there will be sentiment as regards that, and also the unemployment figures from Europe as well has actually been showing that it's not been balanced. Do you understand? So traders are actually looking forward to that, and they are deducing that to a great extent, the Eurozone is also not interesting to actually invest in at this point in time. But one thing I want us to actually hold worthy is the fact that price is coming down at this point in time, but there is a weak support. And there is nothing major that is, aside from the unemployment claims that is bound to be released by 1:30 today, that will determine the position or the movement of the market. So it's expected that price would come down, test this week's support, and probably push back up. Probably push back up because people are hoping interest rates will be hiked from the Eurozone that would make the euro much more attractive as against the dollar that is thinking of pausing their interest rate at this point in time. So what is expected to happen in that case? If I were you, I'll wait until price gets down up until this week's support. So this is more or less like a limit order. This will be more or less a limit order. So you wait until price gets into this trap anywhere within this 107.27 and 1.07.29 or 27, or within the zone of 1.06945. Within this zone is where you should start buying Euro USD from. Don't make a mistake of what I'm saying. It's a limit order. So a limit order is you're expecting price to come down if it's a buy limit, come down, enter into your zone, then pushes back up. That's what a buy limit means. So in this case, you're expecting that price push it into this zone, which is your trap zone, right? Then you start buying. It could be that you want to start buying from here. It could be that you want to start buying from here for price to push up, or you want to start buying from even lower than that. So fight is still within this yellow zone, then you can start buying from there. Then take your profit as soon as price gets to or pushes further up until this first untested resistance at around 1.07313. Are we together? 1.07313 should be where your take profit should be around for Euro USD. So I'm still waiting for price to push well into my zone, which is my buy zone, which is your risk zone. Yes, you can put it at that, which is your risk zone. Then you take the buy right from as soon as it gets lower than that, then you start buying. I would have said we should take the sell, but if you look at the difference from where the current market price is to where the weak support is, you might be making very little amount of money from there. But who says you can't still make money from it? If you have a good account size, of what looks like, let's say, with 500K and above, or even up to 1 million, you can still take the risk of entering the sell and taking your profit before it gets to the weak support. Why not? You can still make money from the sell. But to be on the safer side, the ideal thing to do is to wait until price gets into the zone, settle well into it, and probably, if it fails to break below the weak support, then think of buying Euro USD for the better part of today. I hope you get the analogy of what I'm trying to paint. Right? Right. Moving on real quick. Moving on real quick. Let's analyze something that has to do with the Swiss franc, because by 105, their that's the Swiss National Bank president will be speaking. You notice something, the USD has actually been gaining a whole lot of strength against the Swiss franc over time. And right from let me look at a longer time frame here to see what has been happening in that area. Oh, so on a longer time frame, it seems like price is just doing more or less a recovery from the losses it's actually been doing since the beginning of the year. This was around January. Price was steady around January, but right from March, we actually saw a sell-off on USD CHF. USD CHF. We actually saw a sell-off on USD CHF, but it seems right from April, price has been recovering. Right from the end of April, price has been recovering from the sell-off, which is expected to happen. It is very, very much an ideal thing to happen in the market. Now, going back to a shorter time frame to see the level of push-ups we've been having, because we've been having series of higher highs, right? Which is indicating some sort of how will I put it now? A sort of push up in trend that's an uptrend. Let me put it that way. So from what we can see at this point in time, price is currently resting on a weak resistance. And from the behavior of what price did yesterday, we saw that price struggled with that weak resistance, came down, even with a gap down, then settled a little bit below, but there was still some struggle, or at this point in time, price has covered that gap. This was the gap, right? So with this candle, price covered this little gap we're seeing here. Let me zoom in so we can see clearly. So this was the gap, right? There was a gap here. Then this candle is the one that is covering that gap that we're seeing. I hope you understand my point now, right? So if that's the case, let's go to a shorter time frame to pick an entry that would actually suit everybody at this point in time, and we can make money from that entry. So what is expected to happen if price gets to a weak resistance? If price gets to an untested or any type of resistance whatsoever, be it untested, weak, tested, verified, or whatsoever, price is expected to come a little bit down if it doesn't break above. Are we together? So if price doesn't break above this untested resistance, it is expected, even with the speech that is bound to happen, let's look forward to a bullish Swiss franc as against the dollar, right? So if that's the case, and if I were you, I'll just wait until price probably settles above. But one thing I can assure of is the fact that if you look at the past three candles on this same 15 minutes, you realize that as soon as it touches the resistance, it comes down. The same thing happened on this second candle. It touches it, comes a little bit back down. Then the same reaction is happening on this current candle at this point in time, isn't it? So if you can take a cue from that, it is safe to say that this resistance seems to be a very strong one that price is failing to break above. So if that's the case, just follow what happened some time ago. So with this, you can start selling USD CHF if price fails to break this resistance. So where will I be selling from? I'll just start selling from anywhere here. So if I want to take into consideration the exact price level I'll start selling from, I'll say probably below this moving average. That's my 5-period moving average. So if price can actually break or touch that moving average somewhere here at around price level 0.90997, 0.90997, I'll start selling USD CHF, then take profit before this retracement, or even before your first take profit could be somewhere here if you're the type who doesn't take so much risk. So before it gets to my 50-period moving average, I can possibly take my profit from the sell-off from USD CHF. Are we together? All right. So that being said, let's move on to the Canadian dollar. That's USD CAD. As a result of interest rate hike from the Canadian side yesterday, you can actually see that the quote currency, which is CAD, gained some strength against the dollar, and that's the reaction of what we can see here. Let me go to the daily chart so we can see clearly. So from the daily chart, you can see price reaction, right? So the sell-off was what we saw here yesterday because the Canadian dollar is stronger than the USD because of the interest rate hike that happened in Canada yesterday, right? So if it's anything to go by, and considering the fact that price is approaching more or less a support zone on the daily time frame, now bear that in mind. Price is approaching a support zone on the daily time frame. Now let's look at what we can possibly do on shorter time frames. On shorter time frames. Now looking at it at this point in time, still riding on the strength of the fact that Canada seems to be having a stronger currency than the USD, though I don't think it's going to be on for a long period of time. And reasons being that oil prices as well seems not to be appreciating. And the Canadian economy is majorly dependent on oil, right? So if that's the case, I still see some sell-off on USD CAD even till the end of today. So we must still be experiencing some sell-off. But where should you be selling from if that's the case? Where should you be selling from? Let's go to a shorter time frame and pick an entry. On 15 minutes now, on 15 minutes, we can see the price had even price settled below a turn-code support on 15 minutes. So there's still room for price to still do the same thing it did here. There's still room for it to still push further down up until this untested support. So if I were you, I would say I would wait until price breaks below 1.33470 before I can enter a sell on that instrument. 1.33, or let's do 1.33440. 1.33440 for a sell-off on USD CAD, then sell up onto this untested support. So this should be all you should be doing on USD CAD today. Just take your money from this my yellow zone. That's where your money is. Yes. Just take it within this zone. Then you make some good profit. Hopefully. Right? So USD CAD still selling. So continue to sell up until the untested support right there. The only thing that can probably push USD CAD a little bit for it to appreciate a little bit is the unemployment claims, and that's still going to happen by 1:30 p.m. So you can still sell now and buy later. That's if the unemployment claims from the USD comes out good for the dollar. And unemployment claims means that people who showed that they don't have jobs. So if the number increases, it is not favoring the dollar. But if the number decreases from what they add from last month, then it is good for the dollar. Are we together? I hope we can get that. Do I know the kids are at home now because of what's it called now? Um Midterm. I know the kids are at home, and by next week Monday as well is June 12th. So there's another public holiday, not possible. It's a public holiday. So you can actually make some money before they resume back to school again. There's still room, there's still time to make money in this market. So if you've not funded your trading account, this is the right time, to be honest, for you to actually make some money because you'll be making it in a relaxed state. Before you say Jack now, in another 1 month and a half, they are going on another break that will be prompting you to pay for the next time. So why not make the money as fast as possible now before the pressure starts mounting? Are we together? All right. So let's go real quick. Let's go, let's go, let's go. So indices real quick, or let's do commodities first. Um, let's see what oil has been doing. Now, and I'm sure some of us can actually remember, on Sunday, there was an OPEC Plus meeting. And there were a couple of resolutions as regards some price production cut in production. So because ideally, this is not the time OPEC should be cutting production. Ideally, this is not the time they should. And the reason why I said this is not the time they should be cutting production is because there will be a whole lot of people making use of crude oil at this point in time. Either you want to fly or you want to go on vacations, you want to drive road trips, whatsoever, right? Prices are expected to stabilize because there is demand. But there was a data that was released from China that showed that the Chinese economy itself, because they are the biggest consumers of oil, there was a data that was released from China that showed that there has not been significant growth in global economy in China. And we all know China has a very good or a considerable number of population to determine that, oh, demand has not been high, right? So what OPEC is doing at this point in time is to create artificial scarcity of crude oil by cutting production so that they can keep the prices relevantly high because of the slow growth in world global economy. Did you get the analogy now? Now, OPEC is trying as much as possible to make sure that there's scarcity so that they can push prices up to stabilize prices at around $80 per barrel. So Saudi itself came out during the meeting to say, oh, we realized that, okay, fine, we've been pumping a whole lot of oil into the market. So we on our own, voluntarily, would decide to cut production by 1 million barrel per day. Do you understand? Initially, I think Saudi is producing about, if I'm not mistaken, 10,000, 9,000. So decide to cut it by, did I say 10,000? Sorry. 9 million. Yes. So they are deciding to cut it by 1 million barrels per day so that they can keep prices relatively high. And I think to a good extent, right from what we've been seeing in prices, oil seems to be obeying that analogy with what we saw both the day before yesterday and what we saw yesterday. So further put oil prices up, and Canada seems to be having since the interest rate has been hiked, they to a good extent as well will be looking forward to if prices can actually appreciate so that it can stabilize the economy, then they can put a pause on their rate hike in that case. So if that's the case, and if the artificial scarcity still continues to loom in the market, then we should further see that oil prices will be pushing a little bit further up. But at this point, I would say price is still flat with what we can see this morning. Because if that scarcity is bound to happen, it should be actually be pushing oil prices even further than what we're seeing in this candle or in the couple of candles that's formed today so far. Are you with me? So the analogy is, if you can keep the price of oil relatively high, it brings that, okay, fine, demand would increase because of what we have, then it will drive or jack up the prices of oil. So what I would say majorly we can do on oil today is this candle should close, let me just see. Okay, fine. Let's use this 30 minutes time frame. Let's use this 30 minutes time frame. There's still room for price to still push a little bit above what is happening. So what I would say is, for you to enter a price on oil at this point, just wait until price breaks above this 28.3, this 23.6 rather. Don't do anything on oil now until price breaks above this level. Then you can continue to buy oil. Do you understand me? Wait until price gets to 77.31 before you can start buying, or before you can say you want to buy oil for today. Then you can buy further up until this untested resistance here. You can set your first take profit here. Then if you want to go further up, then you set your second take profit. If you're the type that can take a whole lot of risk, why not? If you don't take a risk, it's a risk on its own. Are you with me? So you can decide your first take profit should be below this untested resistance, and second take profit should be below this 0.0 retracement level for prices to push further up. And even from the current candle, we can see some reaction. Despite the fact that it's looking like a bearish candle, there's still some bullish pressure on it. It is buyers that push this candle up a little bit. That with this week we are seeing is buyer's reaction, right? So if I were you, I'll wait until price breaks above my 23.6 retracement level, which is at price level 77.31. Then my first take profit will be at 77.55. Then second take profit will be before my 0.0 retracement level, up exact price level 78.06. Are you with me? All right. So moving on real quick to gold, which is a safe haven, to US dollar. Let's see if gold still has some steam in it. Wow. So even gold is not attractive at this point in time. Gold is not attractive, but technically you can actually see some price correction on gold. So all this sell-off we are seeing, I'm expecting price to do at least 50% of this sell-off it did yesterday. Did you get my point now? I started selling gold from here yesterday, then took my profit here from what we can see on my chart. I started selling from here, then took my profit here. So this is what I would advise on gold now. Gold, I'm seeing, should do at least 50% of this sell-off. And if 50% of the sell-off is anything to go by, I'm still expecting price to get to this turncoat resistance. Isn't it? So if I'm doing anything on gold, I'll start buying gold from now. Yes, I'll start buying gold from now. Take my profit here. Let me see, push it up. So take my profit at this turncoat resistance. Start buying gold from now. And the reason why I'm saying I'll still go with the buy is, now let's look at something real quick. Okay, the analogy wouldn't work because this is an inverted hammer. I was thinking it's an hammer, or a hammer rather. This is an inverted hammer. Then we see a bullish candle, so it wouldn't work in that case. So let's forget that, right? So at this point in time, but a buy is ideal because price is currently flat, no doubt. So just wait until price probably gets above here. This is the highest high for today so far. So wait until price gets above 1947.55, then take your profit at 1953.60. Let me go over that again. 1947.55 would be an ideal entry for gold today. Then take your profit at 1953.60. 1953.60. Are you with me? And I hope you've taken that down. All right. I saw a question. Somebody's asking if they are to buy go USD IDX or not. It's glaring from the reaction of the candles you're seeing. A buy is very ideal, and for this gap to be covered, right? But you're expected to buy as soon as that gap is covered. That is the advice. So as soon as the gap is covered, then you can start buying USD IDX. But if that price is if the gap doesn't cover, stay off USD IDX. It's as simple as that. Very, very simple. Right? So back to where we were. Okay, we finished analyzing gold and I've given us the entries that I feel are ideal for today. Yeah. Then let's move real quick. We can see the entry from what I can show us. The entry again, as soon as price gets up, breaks above 1947.55, then take a profit at 1953.60. Now move on real quick to indices. D30 first off. D30 has been doing some or respecting significant price level. And that's note of is something that is worthy to emulate of any instrument if you want to make money in this market. It's been respecting significant price levels. And that's the same thing we're seeing here. So D30 can still push up further right from where it is. Start buying D30 if price breaks above 16,000.3. 16,000.3. But one thing I want us to take note of is the fact that this is a higher time frame, which is 4 hours, right? So any decision you're making here, you should know that you should stand by it with your full chest. And considering the fact that D30 seems to be volatile, advisably, if you have a very good account balance, is if you that's what you should that is only when you can take this particular trade. But I'll still do something for some of us who have a lower account balance and still want to trade D30 with probably micro lot size of 0.01. But you should be very watchful if you have a very small account balance on this instrument, right? All right. So let's do this. Okay, fine. So it's not far-fetched actually. Our position is not far-fetched. So you can start buying D30 right from where price is, even on a smaller time frame of 1 hour. Then take your profit as fast as possible before it gets to the verified resistance here. Before it gets there, take your profit. Sharp, sharp. Collect your money. Who said that? I think it was Kiss Daniel. All right. So collect your money before price gets to 16037.1. That's 16,037.1. $16,037, then 1 cent. 16037.1. Are you with me? All right. So moving away from D30, Let's just do one more instrument, then we'll call it a day on today's market review. Let's look at US 30. Wow, US 30. If you're not on that instrument, please try as much as possible to take advantage of what is happening on US 30 at this point in time. So I feel US 30 will still push further up until it touches or gets to this proven resistance. And reasons being that most of the time, when dollar is not attractive to traders, they move to stocks too. So it's not only good that you save even to dollar. Stocks or indices, or this index as it were, or as it may be called, or as it is called, let me put it that way, is what people actually seek solace in when the dollar is not attractive. Are we together? So in a situation where the dollar seems to be uncertain in terms of movement, and it's a reaction of what we're seeing on USD IDX, if it's uncertain in terms of movement, people tend to pitch their tent towards stocks, towards indices. So if I were you, I'll just say until your price probably breaks above this. Okay, the current candle seems to be the most, or the, okay, there's one here. The opening is still in great correlation with uh the opening of today is in correct correlation with it. So if price can break above 33727, please let us understand what I'm trying to say. If price can break above 33727, which is very likely, right? If price can break above 33727, then I would say you can still go in for a buy on US 30 up until this proven resistance. Always try as much as possible. The ideal thing when it comes to trading is take your profit before a major significant level, before a major one. Always take your profit because you don't know what would happen at that level. There could be a retracement or there could be a breakout. So it's a two-way thing. But always try as much as possible. Take your profit before it gets to the next significant level. So with what I'm having on US 30, it's ideal. You can actually take your profit before price gets to 33830. 33830. You can take your profit at that level. So let's just someone is asking me as regards gold. Let me just quickly give us no, you can't say price has broken. See, what is happening on gold now? You can't say this candle has closed above. Price only tested that entry. Do you understand? It is when you see the body of the candle rest fully and closes above that candle, that is when you say price has closed above a particular level. Yes, you don't consider the week as price closing above a level. No, the week is not part of price closing above a level. The week is just price testing the level. So as soon as the body of the candle itself closes above that level, that is when you're sure that you want to take that entry. Do you understand my point now? So like in this case now, it's not ideal to enter yet because with the reaction of this last candle, it didn't close above. It only tested it. Do you get my English now? All right. So that's what it meant. Right? Someone is asking me what's the TP for D30. It's clearly there. That's 16,037.1. All right. So let's call it a day on today's money market review. And what should you put in mind majorly as regards fundamentals, it's the Canadian dollar as well as the US dollar. Is it Canadian dollar? Let me be sure. What do we have there on our Forex factory again? Sorry, the Swiss franc by 105. If you're a scalper, it's a good time to actually take advantage of that market by 105. Anything the Swiss National Bank chairman Jordan says by 105, then scalp USD CHF as much as you can. Then on USD, any USD pair, if unemployment claims comes out at 230, that's 230,000, it means it is good for the dollar. But if it comes out around 235 or 233,000, it is not good for the dollar. That means there are a lot of people in the US that are still fighting for the government to help them out. That's what unemployment claim means. You claim that you're unemployed, that I don't have job. Oh, please, government, come and help me. So that's what it means. So let's get familiar with these fundamentals and make good money from it today. So I hope this money market review has been expository and has been quite interesting for some of us. And I hope we are taking advantage as fast as possible with what I've actually read out for today. So join us tomorrow for another exciting edition of the market review. And trust me, it promises to be another exciting moment for us. So if you want to catch up with this market review, it's live on YouTube, and it's also, if you want to go back and check what the things I've actually said so far, you can just check our YouTube page and you can actually catch up with most of the analysis we've done this beautiful morning. So thank you so very much for joining me in today's money market review. Enjoy the rest of the day and have a very, very beautiful Thursday. Bye-bye.